Good morning, traders. Thanks for joining me this morning on episode number 2479. It is 8 a.m. Chicago time on Thursday, the 8th of June, 2023. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go. We've got a dive into the convergent trading pre-market summary sheet here. This morning, very little news flow, very little to price in. U.S. indices hovering near lows for the most part. The Nasdaq is showing positive one rotation or so, 25 points. The Dow is quite weak at negative 42 points. And that's where we stand this morning. The same with the Euro stocks and the DAX, just very quiet, very mixed open. We've had pretty much a mixed open every day, except for some dotted days here and there on the calendar for the last 2-3 months. It's been a tough trade overnight. Major drivers. Major risk events this morning. Bank of Canada raised 25 basis points. Remember, the RBA, the Reserve Bank of Australia, did the same. Again, the U.S. market is pricing in a Fed hold despite the hot data. This morning, we did get initial claims, and they were higher. We got 261,000 versus 235. We've been actually pretty hot there, meaning claims were lower than expected, and now claims are a little bit higher. So this is kind of this is the most recent employment data that the Fed has before the rate decision next week. And it's showing that initial claims going higher, meaning more people are filing for unemployment, which is kind of relieving that pressure on the Fed. But overall, the BOC raising 25 basis points is a surprise. UK wage growth accelerates at record rate, according to Indeed. GameStop shares tumble after CEO fired, and I'm sure you heard Coinbase is also being sued by the SEC. So that's what's on deck. We have some pretty low tier numbers. I mean, we've got wholesale inventories at 10. We have natural gas. We do have an 8-week and 4-week bill auction at 11:30 Eastern. And then we also have a 15-year mortgage and 30-year mortgage rate at noon. But the big number today is the inflation rate out of China for May. That's going to be very closely watched. The expectation is 0.3%. Hardly any inflation. It looks like China's in a position that Japan finds itself in. Once you get into a deflationary cycle, it's very hard to get out of. Speaking of Japan, Japan is currently the hottest investment market for the developed economies. Its stock market is hitting 32-year highs or 35-year highs. I forget what the stat is. Very interesting. A lot of investment going into Japan. It's been in a slump for a long time, since the late 80s, and that market is really picking up. So, just interesting things happening. Looking at the S&P, the S&P's in a multi-distribution profile. Pretty decent volume actually in the overnight session. The S&P, we got 198,000 contracts. Remember, we've been getting about 150, 160, something like that. And the inventories are 30% short, 30% short so far. And the range is 16.25 points, beat the heck out of the 11 points we had on Monday. The point of control is at 42.74.50. Remember, the 72.73 have been key. Our key areas, as I'll show you on the chart. I'm wondering, let me just stick it in here. Do you trade alone or do you have a group / partner? Alone, with others. I'm going to shoot this over as a community poll. It just popped into my mind, so I'm doing it. Why not? Try to answer this poll. Do you trade alone or are you in contact with others? Again, the volume in the S&P is almost crossing 200,000. Let's take a look at what was expected yesterday. Yesterday, what I expected was the key expectation was that we would likely test higher. We would likely test higher on the open. We had a weakish high on the open, and we were above the full session VWAP, full session mid. The expectation is we would likely push higher. And then if we get below 42.88, the expectation is a test to 72. So a push to 81, the overnight low, and a push to 72. That was the key plan yesterday, right? And then if we push through the high, the 4,300, and hold the 4,300 as a base, if you recall, this is what we talked about yesterday. If we hold the 4,300 as a base, we're looking for 43.16. I'm still impressed by how that 43.16 on the screen looks exactly like how I'd write it on paper. I'm very impressed with how I did that. Usually my writing looks more like this garbage over here, but I managed to pull off a pretty good handwriting there. I'm happy with it, as you can tell. So the main idea is push higher, take out the overnight high, consolidate, and then squeeze if we take the 88. And so we're looking for 72. Here's what actually happened. Let's look at the active chart. Yes. This is what actually happened. This is yesterday's overnight session. You could tell that it's pretty weakish on the top side. We're above. We have a higher low in the overnight session. We held the lower. We held this. Let me try to draw a line here. We held this area right here. No, that's not a line. Right there. We held that area there overnight. So the expectation is the overnight high, the overnight stat would be taken to the upside. This is what we got. We opened at 92.75, tested down very briefly, and then we pushed higher through the 4,300. And then the next question is, do we fight this 4,300 and continue? So I'm looking for indications that this 43.0475, if you recall, the prior high is 43.0575. So we've missed by a point. We've missed by a point. Yes, Convergent Trading's community is not trading alone. That's the main benefit of joining Convergent, is that you're not trading alone. So we missed by a point, and then we ended up taking that out, pulling back to the mid right here, giving us the first actually decent-ish setup to the short side. And then the expectation was, if you recall from the prior screen, is 72 right there. That's the 72 I was talking about, and we ended up pushing right to it. Unfortunately, pretty decent squeezes here, especially the break of the IB that took the short out, because I'm not a swing trader, but it ended up going the full distance to 72. We ended up settling at 74.25, and we ended up with what was a relatively weak low. If you look at these lows and look at how the taper happens, and the fact that the point of control is at the lower quartile of the range, the expectation is that the auction is not done overnight and that we are likely to push through the low of yesterday. So if you're short into that close, pretty decent odds. Uh, Again, past performance is not indicative, but pretty decent odds historically that you would see a lower low. And we did. And so what we've done in the overnight session is we've built an overnight point of control right on top of yesterday's point of control and yesterday's settlement. This is important because at the same time, we built a week high in the overnight session at 79. We went to 78 something and then 79. And here we are with the VWAP mid point of control, all within a couple of points or 4 points of each other. And we're opening in this sandwich right here. So the question the question is, do we find this as a base, given that we accepted overnight what we did during the day right against that 72, that all important 72 area? I'll zoom out in a minute to show you why the 72 is relevant. And then the question is, do we throttle up and take out the overnight? If we throttle up and take out the overnight high, then I'm looking to trade pullbacks right back to where it all started at the 42.88. So now we're looking at the 42.88 once again as an initial test. And then if we push through there, then we're looking for it to squeeze all the way back up. More likely, however, I'm expecting this thing to either test up and fail or make an attempt higher. Let me push this, squeeze this to the left, make an attempt higher, looking for this to make an attempt higher, consolidate. We close the settling price, which is about a 72% historical probability today. Historical probability for today's situation. Today it's 50-50. And then I'm still looking for that test of 42.50 and then 42.39. 42.39. This is the key test. This will be the gap close. Okay? So I continue to lean to the short side. We have a lower high and a lower low overall. The market has put in a rounded top, and I'm expecting it to continue to squeeze to the downside. There's nothing to price in here that would cause participants to think, okay, this is cheap. Yet we don't see anything technically that says, yeah, this is cheap. I mean, look at how it closed. It closed quite weak. It closed quite weak. This is kind of a classic kind of compression and break. It closed quite weak, and I expect it to continue to be weak unless we get a memo in the form of price and volume that tells us anything different. Okay, so that's the ES. Let's take a look at why that 72 area. So this is, you could see that we had this double bottom here. We had a double bottom here, and then we consolidated and held this. Could not close. Not that a 30-minute close makes a difference to me, but yesterday on the one-time framing down, we ended up basically one tick. We ended up one ticking I period, ended up one ticking H period before popping back up, which is generally pretty bullish. Like if we go all the way down, and the best we can do is take out the low by a tick and bounce back up, I period pushed all the way up to 82.50 or something like that. And so if we bounce back up, the expectation is that is bullish. What the market has done is it has checked for further selling, stop runs, things like that, and was unable to successfully solicit more selling, and it was successful soliciting buying by one tick. Again, pretty bullish to have a one tick failed auction at the low of the day. Yet the best it could do is turn up to whatever it is, 82 or so, and then it ended up closing right at the low against our 72 level that was marked from Monday. So to me, here we are just below it, just at it, 72. To me, this looks very weak. So if I clean this up a little bit, what you have is a big push up, pullback, higher high, higher low, lower high, and holding that low. And I'm looking for this to be a weak low now. And the expectation is it's very likely to move down into this 50 and then to the 39. 39 is the next key support. It is the high of a couple of weeks ago at 38.50. 39 is where we ended up finishing before we gapped up the following day. So again, 49 and 39 remain big targets for me, and that's what I'm shooting for today as a primary scenario. But all of that gets negated, as I said, if we start to break the overnight high and hold above this 79.80 area. If we get support and can start to continue to push up, then we're looking for 88, and then we're looking for the market to push back up into 94 and potentially 4,300. I know that's a lot to digest. I'm speaking very fast, but this is what I'm looking at. The NQ, nice little high for the year, lower high with an excess. It tried to trade a lot up here, but yesterday was multi-distribution, trend down, much cleaner trade in the NQ yesterday on the short side. And I talked about this. Let's see if I can find it. I talked about this NQ thing. There's the NQ. I talked about this. I said if it breaks through the 14,561 or so, it is a runner. It is a runner to the downside, as you see the arrow there. This is from yesterday's video. I'm just playing back yesterday's video. It's kind of handy to have it. And I said early on, it's likely to be choppy because there's not much going on in the order flow on a cumulative delta. But overall, I'm expecting the NQ to kind of squeeze lower. Here's the Russell. If you remember with the Russell, we'll talk about the Russell here briefly. If you remember with the Russell, I talked about the fact that it went through this thin area, which is a series of unfair prices right in this 1868 to about the 1829-ish top of the balance, or 23-ish top of balance, and we had poor structure above there, and it's very likely to move to, what did I say? Let's see if the words are here. I said it is very likely to move to the next balance zone. It says it right there in the transcript, the next balance zone. And what I did is I squeezed this chart, but it was loading the data and I didn't bother waiting. So I'll show you what that is. I know I'm skipping around a little bit, but I'll show you what that is. Here's the Russell. So remember, I squeezed the chart and I was looking to incorporate more data into this profile here, and look where the Russell finished. The Russell went right back to the next balance zone, exactly as expected, right? Exactly as was said. It's very likely to look for the next balance zone, and that turned out to be the exact area it was pushing through to, and that next balance zone is around 1893 or so, and that's where the Russell kind of rested and topped out. So as we pull this in here and look at the Russell, the action is between 1883 and 1899 currently. And so we are in this kind of balance area from here. So the Russell is finally, after like 3 months, the Russell is actually starting to follow the normal auction process. Back to the NQ. This is where the NQ is. The NQ is expected to continue lower to 14,250 is the next key area. But in order for the NQ to catch up, so the equivalent price in the NQ, as is the S&P right now, is around 14,200. But the NQ is really holding on to those higher prices. It's been bullish and stronger than the ES from the break onwards, with the settlement of 14,332, and it's trading a little bit above settlement right now. but overall the expectation is it's likely to break through this low volume zone and retest this area down here at 14,050 to bring it back into line with everything else. So that's what we're looking for there. Crude oil, and by the way, I know several of you um, have asked about the Dow, and I generally stay away from the Dow. The first futures product I traded when I switched from being an equities SOS bandit scalper to a professional futures scalper, the Dow was the product that helped break me into futures, but I generally don't like trading it because it is far too easy to create that index, and it's far too easy to manipulate, and it's a price-weighted index, and it just doesn't make very much sense to me. The most expensive stock controls how the Dow trades versus the largest market cap stock controlling how the product trades. But I will incorporate it. It's a key index. I will do the work to bring it in and start looking at it every morning if that helps some of you folks. Here's crude. Crude still kind of trading in that middle. Let's zoom out in that middle box. We drew this middle box in from way back here in early May, and it's just been carried forward, and we're in this middle box, and we're still battling the 72 area, which is the mid of this last drop, and it's balanced now. We have a double pronged balance. As you can see, we're likely to shift the point of control up to 72.53 from 72 even, but to me, this is very likely, this is basing. The price action says that it's very likely to be basing. I'm expecting it to take out the 74, and I'm expecting it to run to 76 at some point soon. And I know OPEC Plus is making an effort to make that happen. They like it in the 80, 82 area, I think, is what they said. And they'll probably be successful because they get to control the spigot. They get to turn on and off and tax all of us through our consumption. But crude is just hanging tight, not the greatest of trades. We've covered everything. I gave you the scenario for ES. We've looked at the NQ. Looks like the live play is way behind. Wow, it's like a minute behind, way behind. So it's hard to ask you questions and get a response. But that's what we have. Your job is to define the context of what you're trading. Your job is then to define areas that you will engage based on price action, volume profiling, fibs, whatever, moving averages, whatever you're using. Define those areas, and then your job is to wait for the market to come to those areas, test them, and then your job is to read whether or not the test is successful, and you can jump in while leaning on that level for risk control or not. So our job right now and will be throughout the summer to wait, and then our job is to wait, and then our job is to wait and wait, because as I showed you yesterday, the VIX is just falling off a cliff. It's down at 15. As soon as it gets below 12 to 10, it just becomes really intolerable. And I move to trading crude and Q and look for thinner products like the DAX and so on to trade. That's what I've had to do in 2010 and 12, 2016, parts of 2018. That's how things worked. Good luck, and I'll catch you tomorrow morning. Don't forget, by the way, to hit the like button. Please hit the like button. There are only like 200 likes, and there are about 15 to 1,800 views a day. Hit the like button so it's easier for this channel to rank a little bit better. For those who are looking to trade, can come here and learn how to properly trade, in my opinion. And then the second thing is, if you're not subscribed to the channel, subscribe to the channel to help it get boosted. And subscription is free. It doesn't cost you anything. You'll get notified if I post anything, or when I create the event, you'll get notified. Good luck, and I'll catch you tomorrow. Take care.